Hey everybody, it's Thursday. You know what that means. It's the Financial Thing live stream. Yes, we're a little bit early today or this evening, 6:30 p.m. UK time. Normally 7:30 p.m., but today had to do the stream a little bit earlier, so anybody that isn't able to tune in live can definitely watch and catch up. I have to go to a doctor's appointment today, so one of those annual physical things, couldn't change the time, so I thought I'd just do the stream earlier than instead of doing it on a Friday. Hope that's okay with you. I hope you're ready to learn, and I don't know if you've noticed, but we got a bit of a new setup here. I got tired of sitting, so I invested in this stand-up desk that moves. Check this out. Wait. Look at that. Look at that. It's like live camera movement there. You can see the dog in the background. But decided to have a little bit of a healthier lifestyle. They say, standing while you're working is a good thing. So that's hence the crazy looking different angle of the camera. And as you can see down here, I have to point to it. Instead of the usual sponsorship graphic that used to be there, now it is occupied by Harley, the official wiener dog of the Financial Thing channel. Because 2024 has come to the end of our little sponsorship agreement that we had, so right now we are sponsorless. We're actually sponsored by Santa today and by Harley, so hopefully we'll be finding a new sponsor for 2025 so we can continue to pay the expenses that it costs to run this stream and this channel. So we'll see what happens. If you know anybody who wants to sponsor the channel, or you want to join the Patreon and help support Financial Thing, please feel free to do that, and appreciate your support. Anyway, since I'm on really limited time today, I was going to crack on. If you can, subscribe. If you haven't subscribed, hit that thumbs up button. Appreciate all that good stuff. It is a very, very beautiful day here in Orlando. It's about 18 degrees. I got up this morning, it was about 6 degrees. It was really, really chilly, which is really chilly for us, but now it's warmed up. It's sunny. It's a good time. So anyway, quick hi to everybody in the stream and the chat. Thank you for joining. We're just going to get straight into it because quite a bit to cover. We're going to be talking about some P2P lending. We're going to go through the London House Exchange report that was put out recently with some updates on their portfolio, aka Property Partner, which I'm still invested into. Decided to kind of let that one roll. Not sure what the outcome is going to be, but it seems like they're moving in a positive direction as far as selling some of the properties there on the 5-year term. We are going to talk about some really interesting emails that I had this last couple of weeks from the mailbag that we'll go through, and a little bit of Bitcoin news. We'll take a look at the Trading 212 portfolio, show what I've been doing with that. And I hope you enjoy the next 45 minutes to an hour. Let's get right into it. I'm going to zoom in just a little bit here, if I can. Some news stories. There we go. Hopefully you can see that okay. See if I can scroll just a little bit. Nope. Is that okay? Can you see that? I think you can see that. Okay. All right. Peer-to-peer property bosses voice optimism for 2025. Right? That's a good thing. We had a couple of peer-to-peer lending bosses who have piped in for this article. Number one, we've got Shojin founder and executive chief Jatin Ondia, who said his firm will continue to grow for the next year with new hires and tech expansion as well as growth internationally. Our investor base continues to grow in both the family office and high net worth retail sectors. And our international expansion continues with an upcoming office in Dubai to service the Gulf Cooperation Council countries and wider regions including India and East Africa. And something is underway in Australia too. It's been a busy 2024 and will be an even busier 2025. Shojans is also about to close its first Sharia-compliant whole loan, opening a new market for its product. And then we have second person Relendex Executive Chairman Paul Sonnabend as reflected on a successful 2024, saying that Relendex expects returns for 2024 to be broadly in line with the previous 2 years after loss adjustments, which will mean that it's consistently returned about 8% to investors over the past 5 years, producing a compounded return in that period of approximately 46%. So two peer-to-peer lenders that we talk about a little bit here on the stream doing well for 2024 and also looking at very positive outcomes for 2025. We'll see if that's the case. Certainly hope so. LendInvest narrows pre-tax losses in the first half of 2024. LendInvest, I don't know if you remember, but they had some pretty substantial losses in 2023. 15.7 million pounds of a loss. Huge loss. But then now LendInvest has narrowed its pre-tax losses and boosted its lending volumes by nearly a third over the first half as it eyes full-year profitability. LendInvest reported a pre-tax loss of 1.7 million for the 6 months to 30th of September 2024. Again, that is up from a 15.7 million pound loss in the comparative period last year. Meanwhile, lending volumes rose by 30% to 539.1 million pounds by strong growth in its mortgage division. Funds under management increased by 12% year on year to 4.67 billion pounds. It's a pretty big number. Not strictly peer-to-peer lending, but we still cover them because they are part of sort of what we invest in. And that has been also driven by successful capital raising projects at 4.6 billion pounds. They've expanded their partnership with JP Morgan from $500,000 to 1.5 billion pounds with an extension for 3 years, bolstering growth for buy-to-let and owner-occupied products. And it's renewed a 300 million pound financing syndicate with BNP Paribas, Barclays, and HSBC. Assets under management grew by 9% on the year to 2.95 billion pounds as the firm's focus on third-party managed assets drove a 71% rise in net income, reaching 11.1 million, and their debt fell by 29% year on year to 601 million pounds. Still quite a lot of debt, but in order to grow at a size that a company like LendInvest wants to grow, debt is kind of one of those things that they have to take on. So I would say generally positive for a company of that size. 1.7 million pound pre-tax loss, not terrible, certainly going in the right direction. Hopefully that will continue. Peer-to-peer lending investors doubled their money over the last 10 years. This has kind of been a narrative story that I've read over and over again. And this is something that Fourth Way has reported on in the past, according to their peer-to-peer and direct lending index. I mean, again, this really assumes certain things that, you'd be investing in the entire index, which people just don't tend to do on peer-to-peer. We're picking out investments and maybe investing in 4 or 5 different companies, and then maybe different loans within those companies. So again, I think this is a very misleading headline, but still a positive spin, at least for the peer-to-peer lending industry. Basically, it said that peer-to-peer lending and other lending direct companies have returned 7.3% per year after costs and losses since the end of July of 2014. So pretty long time that they've been studying how long this is actually affected in a positive way. By contrast, savers and cash ISAs have made just 1.77 per year over the same period, so 1.77%. This means that in 10 years, peer-to-peer lenders have turned 10 grand into 20,468, more than doubling their money. Meanwhile, savers have turned 10,000 into just 11,956 pounds. Very important point, though, that cash eroding away. Obviously, interest rates have been better than they were back in our super low interest rate days, but still holding cash over the long run is just turning out not to be a very good idea. And we still have a really big percentage of people that just want to leave their money in cash and savings accounts. I was like that too many years ago until I realized that looking back over history, it just doesn't make any sense absolutely at all to do that. So it's a good lesson to learn that, especially if you're younger, get that money deployed into something. Obviously be smart about what you're investing in. But if we can see here that savers have turned £10,000 into just £11,956 in a cash ISA over 10 years, you can realize how bad letting your money sit in savings accounts are. Anything else? Let's see. The constituents of the fourth way index. Lending volume is equal to half the size of the P2P lending market at around 750 million pounds. Among them are crowd property with a 10.1% lending rate, Capital Rise 8.79%, Cufflink at 8.72%. They're pretty good rates from those three companies if you happen to hit the good loans. Moving on, we have a rebrand announcement. Assets Exchange, I saw that come through last day or so. Housemartin is going to be the new name for Assets Exchange. So Assets Exchange, obviously they want to get rid of the Assets name because of what's happened with Assets Capital. Interesting choice of name. I definitely didn't see that one coming. What do you guys think about that rebrand name, Housemartin? Reminds me of the pop band in the the 1980s, the Housemartins. There's that one song that was in the charts, but interesting name. So obviously it's saying the rebrand is Housemartin with a slick new look. The rebrand investors can expect same company, just a new name, same experience, same investment, same bank account, same customer service, same website with a new look. Same in every other aspect. Why are we rebranding? The Assets Association has served as well, but they are keen to break the link to the Assets brand and move forward with a crisp, fresh look. We've had Peter Reed on here from Assets Exchange. Guys, it's going to be hard to say mentally it's going to be Housemartin, but we've had Peter Reed from Housemartin come on here and explain why they cut their ties with Assets Exchange. Basically, they don't want to be with Assets Capital anymore, and that name has not been very well received recently, so that makes sense. They have a new website, so here's the new website. I like their logo. It's kind of cool. Looks like a little bird. Looks like a Housemartin bird, maybe. So new website. Same company. You see the properties that they're offering here that have been the latest properties. So they continue now just to go along the same path with just a new name, a new rebrand. I think it looks good. I'm impressed. I think it's a nice rebrand for them. So let me know what you think. Let's have a look and see how it works. Just a little overview of Housemartin. So very cool. We had a letter that came from RSM about Lendy. This is saying that there are some M2 distributions now, which is the sixth tranche. In accordance with the protocol, the joint administrators have processed distributions for the sixth tranche of M2 loans. That would be DFL, Development Loan 002, and PBL 178. So if, again, you've not logged into your Lendy account, there is a lot of money sitting still, unclaimed funds. Look at this, 1.86 million pounds from 9,841 investors who have just let their money just sit there. Maybe they don't know it's there. I don't know, but log in and check your accounts. See, here's the numbers on these two. Distribution 2.4 million pounds. Sorry, 2.4 was the gross asset realization of DFL 002. I thought I had some of that loan at one point, but obviously I do not. There was a distribution of 1.582 million on that one, and then PBL 178, which was a gross asset realization of just short of 570,000 pounds, not including the costs. But they've managed to distribute just 106,610 pounds of that loan. So again, check your account if you have not already and you aren't invested in those two loans. This is the LHX. I don't know how many of you invested in LHX, but this is the old property partner that I dipped my toe in many, many moons ago. I do like to go through this because we do have some people on the stream and who watch this on catch up that are property partner invested and are just kind of hanging on there to see what happens. But this gives a good summary here of where the company is as of the 30th of September 2024. They have now 310 total current units. So from the 31st of March to the 30th of September of 2024, 30th. So if we go back, say, let's go back to September of 2023, they have sold about, a little bit less than 100 units. So really moving those units, which is good. Now they have 310 left, 218 sold as of the 30th of September 2024, 76 under offer, vacant 46 for sale, 6 to let, and 182 let. So it's a lot of properties that are being let. Rental performance has been getting a lot stronger as of Q2 2023, and started to get a little bit stronger there, 9.3%, and then up to 3.2% in Q2 2024. So rents have been increasing. Contracted rent grew by 2.1% in 12 months across 182 tenanted units. There were 27 residential units completed in Q3 of 2024, which is amounting to 5.6 million. The average interest rate across our mortgage portfolio stands at 8.1%, which is unaffordable for the majority of residential properties because they're not yielding 8.1%, so technically losing money. They're continuing to pay down mortgage debt whenever possible. That is their goal, is to get rid of that debt. And also there's a couple of properties down here that still have fire safety issues. And I haven't really paid much attention to this, but I decided to go ahead and look at one of these properties and say the Heights here in West Bromwich has had remedial works completed for these fire safety issues. And I was wondering, well, who pays for that? Because that could be pretty expensive. Did a little bit of digging and I found there is this fund called the Building Safety Fund, which is operated by the government. I opened in June 2020 for buildings over 18 meters. It aims to provide funding to fix fire safety problems with external cladding. And the Heights West Bromwich ended up, I think, costing about £600,000 to do that. And the property partner, or LHX, was able to apply to this building safety fund to pay for that, which really means that as taxpayers, we're all paying for it, but it's better than 600 grand coming from the investors themselves, I guess, of that property. A pretty interesting thing to think about, that, you know, when you're investing in real estate, that these types of things can come up. Now, if that fund had not been there for the investors in property partner, then they would have been coming out of pocket for this 600 grand. So that is one of the unfortunate risks of investing in high-rise buildings or any type of building. Something may just pop up that you don't even think about that exists as a problem, and then you have to end up coming out of pocket. So LHX moving in the right direction. Preferably for me, it would be just a complete 100% exit. It's not been paying dividends. Some of the share prices have gone up since when I bought them. I was in pretty early, but some of them also lost 50-60%. So I think it all balances out. I'd be surprised if I came out of there, you know, more than like 5 or 6% to the good. So not the best investment at all. Let's go to the mailbag. We're racing through today. It's 6:50 p.m. in the UK. Hope everybody is doing well. This is a letter that came in, or an email from Chris in Bedfordshire that said, first of all, thank you for all you do. I'm an avid watcher of the YouTube show. You're welcome, Chris. I recently made my first LoanPad peer-to-peer deposit into the premium account. It feels like it's one of the companies doing a good job. Agreed. Yes, I do agree with that, Chris. I was wondering about the £10 minimum for reinvestment. Is that likely to reduce anytime soon? Also, approximately how long will it take me to save £10 if I deposited £3,000 to begin with? I'm thinking that the more money I can put in order to save the £10 quicker will reduce the cash drag. No? Hope you can answer this. Thanks as always. Yes, I think the LoanPad continues to do a good job. Haven't heard anything to dispute that. The £10 minimum, when is that likely to reduce? Well, we've been told that is supposed to be reducing very, very soon. But as of yet, we still don't see anything. I know they're doing a software upgrade. They're working on that. I would expect Q1 2025, we'll see that £10 minimum reduced down to a penny. Get rid of that. As far as how long does it take you to save £10 if you deposit $3,000? Well, I would say not save it, but earn £10. I found this nifty little calculator. So if we take 6.5% on the premium account, which is going to decrease a little bit in January and February of 2025. But if you go to the calculator site, Chris, or anybody else out there, it's a great website. Let me see if I can move this over just a little bit. Can I? Let's go ahead and there we go. There is a daily, if you click on these links up at the top right here, there's a daily compound calculator, which is really good in figuring out how much you need to hit that £10 amount if you're invested in LoanPad. You can also use their regular compound interest. But I put it in here, £3,000, 6.5% annual interest rate. And I calculate it will take you 19 days to earn £10 and 17p, right, to get to that £10, so that then ultimately gets reinvested. If you had, say, £6,000 in there, you're going to see that cut down, I would imagine, to maybe 10, if I had to take a guess. Yeah, look at that. About 10 days. So double cuts down in basically half. So you're going to get reinvested every 10 days and so on and so forth. You can use that calculator again. You want to figure out how much you have to put in to get how much you want back out to get to that £10 as quickly as possible. When those rates change, it's going to become a little bit longer. And also when that £10 minimum comes down to a 1 penny, it's not going to affect you as much. You'll actually be earning more money in compound interest than you actually are being offered. So for instance, if you put in 3,000, let's show you this, 3,000 at 6, so we'll go to 6.4% because it is going to change. And compounding daily over a year, if my math in this calculator is correct, you're going to get about 6.61% after compounding. So about £198 and 26p interest if you were to take that interest, as it were. So adding on to your initial balance. So not bad, not bad. You get a little bit better rate than 6.5%. If you're just withdrawing the money as income, then obviously you're going to get the flat 6.5%. So I hope that answers your question. Hope that answers your question, Chris. Thank you for sending in the email. Let's see what else we got. I got another mailbag question here. This is a really good email that I got. I really love this because it really thinks, about people changing how they grew up. So it says, hi, I've just graduated from uni and somehow managed to land my first decent paying job. Congratulations. I grew up poor and mom and dad never had anything or managed to save. As kids, we were never taught anything other than to spend what we had. I really want to change that pattern for not only myself, but also the rest of my siblings. I'm determined to change the family story. Honestly, I'm really scared to invest money into stocks and shares. I know you're a big fan of index trackers. Could you give me a bit of backstory as to when you started buying them and what that was like for you? I think hearing that would calm my nerves and might help others who could be struggling with the same mental blocks. Anyways, enough from me. Keep doing what you're doing, as I, for one, appreciate it very much. Cheers, mate. Harry P. I don't know how old you are, Harry. I'm presuming you're in your early 20s if you graduated from uni. But that is a really, really great email, and I can certainly relate. I've met many people in my time where parents really didn't have anything, and they didn't teach their kids about finances because they didn't know themselves, and it just kind of trickles down the river, right? The mom and dad doesn't understand about finances, passes along to the kids, they pass it along to their kids, and that cycle never breaks. So that's really good at a young age that Harry wants to change that. Beautiful thing. I think this is the reason why I do this, to get this type of email and to see somebody who really wants to change what they're doing. So I can show you here. I had the same thoughts and feelings that you did. Unfortunately, I just waited for much longer to take my first dip into the water. And this was my very first purchase that came into my trusty Vanguard US index tracker. I can see here, back then it was called VUSE or VUSII. I believe they changed the ticker name. But this is a screenshot from iWeb, the awful interface stock buying program that I don't know if anybody of you use iWeb Halifax right now, but this is the first purchase in the 18th of December 2014, so almost 10 years ago. So I was how old would I have been? I had to think about that. 41 years old. I didn't get started. So kudos to you, for Harry, for thinking about doing this in your 20s. But this is my first buy. As everything, most of what I had in savings went in to that index tracker. And the price here, you can see 26,672. So that would have been £266 and 72p. And then from there, when I transferred the account out of Halifax to Vanguard itself, to see this was in 2019, I started buying regularly. I'd set up this monthly purchase of £315 plus 25 into the global bond and 5 into life strategy. Well, I don't know what I was thinking there. Eventually got rid of these two things because bonds were not really doing well. Not to say that would be right or wrong for anybody else, but that depends on your own personal risk tolerance. We got rid of these two funds right here and just purely put 100% into this U.S. equity index fund. And I was actually, back in 2014, I was very, very, very nervous. This is a common thing, I think. When you first start investing in anything, you've always got this terrible feeling that the day you put your money into an investment is the day that everything is going to crash and everything is going to go down. But really, time heals everything. They say in love and investing, time heals all. If you can sit on your hands and just stay put, you'll be okay, right? And case in point, 18th of December 2014, £266.72. Let's see where we are right now. Here we go. Historical price. Let's have a look. £1,067 and 10p. As of yesterday, Wednesday, December the 11th, 2024. So 5x. You 5x from the money. If only I had that foresight to put and borrow the house and put more in, I'd look like a genius. From £266 and 72p. Point in case here is that historically, and while there is no guarantee in anything in investing, but historically we have seen these prices continue to rise. It's almost kind of lazy that we could sit back and think, wow, we could just put money into this investment here and not do anything to help this thing grow. Just sit on our hands and don't sell. That's one of the biggest problems. Don't sell. Doesn't it feel lazy that you can ultimately build wealth by just buying one single product, just sitting on your hands and doing nothing? What did we do to deserve that? But yes, Harry, I had the same petrification, same scared feelings, same anxiety when I was investing in these products. But I tell you, once you dip your toe into the water the first time, and you start to see some progression, you start to see good things happening, then those fears will ultimately disappear, and you'll realize that investments go up and down, but as long as you sit on your hands and do nothing, you'll be okay. So I hope that helps you out. Good for you for doing that. Another mailbag letter. Here we go. We got an email. This was good timing because on the 5th of December I got this email. Hi Al, I just signed up a Vanguard account, but the fees with BUTT. Thought that was funny. But the fees, what are the fees? Surely they have to make money somehow. If you could explain on YouTube perhaps. Cheers. Nigel, yeah, so we got a letter or an email saying that Vanguard is changing their fees. From the 31st of January 2025, this is Vanguard UK, by the way, anybody watching in the US. £4 a month minimum account fee for anybody that has less than £32 invested. They're changing how they collect the account fee. They're changing their process around forward draws, transfers out of Vanguard. What's changing now? You pay 0.15% on any invested balance capped at $375 a year. From January 31st, 2025, you're going to pay a max of £48 a year for any invested balances under 32 grand. So if you're a small investor, £4 a month, and you'll continue when you have over £32,000, God willing. That is the same as today, 0.15%, capped at £375 a year. So let's do a little calculation here. My brain is not that sharp. But what is £48 in percentage of 32,000? This is your best case scenario. Look at that, it's 15%. Imagine that. I bet if we reduce that, there you go. See, this is how Vanguard makes money. Because if you have 15 grand invested, you're going to pay 0.32%. If you only have 5,000 invested, you're going to pay close to 1%. So there you go. That's the answer to your question. How do they make money? That is how they make money. They change their fees. Sometimes they make it look like it's more beneficial to you, and actually it's not. People who have low balances are going to end up paying more in fees because it's a fixed rate instead of the 0.15% rate. So see, if you were paying 0.15% of 5,000 as it used to be, right, that's only £7.50. So a lot less per year. That is only 0.15%. There you go. So look at that. I don't know. I had a bit of a brain fog right there. But yes, so the fees are going up. Give some examples of how that affects you financially with a couple of examples. How do they take that money from you? We take your account fee from your general account if you have one now. And from January 31st, they will take the account fee from all accounts you have in proportion to their invested balances. So if you have split between, say, an ISA and a general account, they are going to take half from one account and half from the other. Or you can set up a direct debit. That's what I would do. I'd suggest just pay it out of your bank account. Don't pay it for your investments. That doesn't make any sense. What about withdrawing? If you decide to withdraw from Vanguard, everything from your account to another provider, we send the full amount requested. When fees are due, you need to fund your account to pay them. That's now from January 31st. If you decide to withdraw everything from your account, we take any fees first due to us and then pay any interest to you at the same time as transferring your money to your bank account. There's still no charges to withdraw or transfer from Vanguard. There you go. Some changes, some things to note. Trading 212 time. What's going on with the portfolio? £25,038. We've made a little bit of a gain since last week. I think about 500 pounds, right? So Amazon, gosh, Amazon is screaming 32% in the green now, making it look like a bit of a genius buy. Coinbase 92,000, sorry, 92.6%. I wish I had 92,000. MicroStrategy up about 9.3%. Pretty volatile. As you can see here, within a week we've gone from $420 down to $395. Did add to that position again. See what we did there. Can't remember. History, let me look at the history. '10th, so 2 days ago, bought another 400 pounds of MicroStrategy, trying to add to that position. Would love to get in a little bit lower, but Bitcoin seems to continue to be strong. Nvidia, nothing changed as far as positions, 43.5% in the green. Valco Energy is just really not doing much of anything at the moment. I've said if some of these stocks retrace, like MicroStrategy or even Amazon, that money will probably rotate from the energy into Amazon. Is just too slow moving for this portfolio now at this point. Given it a good long time, and while we've sold some of the profit, which has been good, I think it's time probably to move on from there. And then our Vanguard S&P trusty S&P, basically like an index tracker, 10.85%. So yeah, going in the right direction. All positive. Have been able to make some donations to charity this year with the profit, which has been really good. UK inflation getting a little sticky, like I said it was going to be, right? 3.2%. So heading back up a little bit, considering the 12 months. Let's see. We were in 2.6% in September, so we've added 0.6% onto the inflation in the UK. Very interesting how that works. You know, the whole goal was to keep inflation at 2%. Obviously, that is not happening at the moment. Shall see what happens with that. What else we got? Let's see. On my tab. I don't know if we talked about this last week, but Celsius was a crypto company that failed in the U.S. Well, Alex Mashinsky, who's the former CEO, has agreed to 30 years in prison for his fraudulent activities. I wonder if his wife is going to be taken away with him. I hope so, because I'm sure she was in on it. But he has agreed. I don't think he agreed. I think he took a plea deal. 30 years in prison. Good riddance. Michael Saylor, the biggest Bitcoin bull in the world, has now increased his holdings in MicroStrategy of Bitcoin to $42.78 billion US dollars. Get your head around that. He has 423,650 Bitcoins. Plans to continue to keep buying more and more of this stuff, and says he will never sell it. It will go to his grave with him. We'll see. You know, I don't know if you've heard any of the talk about MicroStrategy and what they're exactly doing. It's very interesting. The infinite money glitch that's been crowned. Basically, they're issuing debt, selling shares, and also issuing debt using option strategies. And big companies are biting on these products, putting in hundreds of millions of dollars, if not billions of dollars, including Alliance, one of the biggest insurers in Europe. And they're taking on those bonds. And Michael Saylor and MicroStrategy is just buying more Bitcoin with all the debt. And he's getting that debt at 0% interest coupons, which is crazy. So these companies believe that the product he is offering is giving their companies exposure to Bitcoin without actually having to buy the Bitcoin itself and hold it. So they're getting exposure to Bitcoin through MicroStrategy. And I think they'll continue MicroStrategy to offer these types of products, offering exposure and different financing products to companies around the world. So interesting stuff. Huge holding, 42 billion. I think he bought more this week. So it's absolutely incredible what he is doing. Let me show you that screenshot so you can see 42.78 billion right there. 423,650 Bitcoins. Will it continue to last? That's what everybody is asking. time will absolutely tell on that one. See what else I got for you. Mr. Donald Trump announcing that David Sachs is going to be the White House AI and crypto czar. Don't know how I feel about it. I don't know if he actually used that name, czar. It's a pretty interesting name. But this guy is very, very, very pro AI, pro Bitcoin. He has been buying since 2013. I don't know if you can read that, but it says, shows that he's been bullish on Bitcoin. He's been buying since 2013. He's going to be Mr. Trump's right-hand man when it comes to that, so that's a pretty bullish sign, I would say. And then Eric Trump has been doing the speaking round, saying that he believes Bitcoin will eventually hit $1 million. So very interesting that the son of the president is out on the stage talking about what kind of a future Bitcoin will play into America's future and the world's future, and how it's going to affect politics and banking. Basically what he was saying was that, you know, the Trump family has been targeted by things that have happened, that they've realized it's good to have some independent financial assets where people cannot close bank accounts on you. You know, big banks, they can shut down and freeze your accounts at any time. He's saying it's good to have things that are, people are not able to do that. And it's very interesting. There's a video on floating around on Twitter. If you want to watch it, you can Google it. It's really worth a watch. 25 minutes of Eric Trump talking about what he feels about the blockchain and cryptocurrency. I thought this was a really, really interesting video. This is talking about money. I'm just going to play it for you. Hopefully you can hear this. Hang on.
It's the question. Why exactly are we borrowing in a currency that we print ourselves?
Maybe this isn't going to work again. I didn't have any luck.
It obviously begs the question. Why exactly are we borrowing in a currency that we print ourselves? I'm waiting for someone to stand up and say, why do we borrow our own currency in the first place?
Like you said, they print the dollar. So why does the government even borrow?
Well, I mean, again, some of this stuff gets, some of the language that some of the language and concepts are just confusing. I mean, the government definitely prints money, and it definitely lends that money, which is why the government definitely prints money, and then it lends that money by selling bonds.
This is the, by the way, this is Jared Bernstein, is the chair of the Council of Economic Advisors to President Joe Biden.
Is that what they do? They sell bonds. Yeah, they sell bonds, right? Because they sell bonds and people buy the bonds and lend them the money. Yeah. So a lot of times, at least to my ear with MMT, the language and the concepts can be kind of unnecessarily confusing, but there is no question that the government prints money and then it uses that money to yeah, I guess I'm just, I can't really talk, I don't get it. I don't know what they're talking about, like, because it's like the government clearly prints money, it does it all the time, and it clearly borrows, otherwise we wouldn't be having this debt and deficit conversation. So I don't think there's anything confusing there.
Wow. Yeah, this is the people that are in charge of the economics and financial departments in the USA. So as this tweet says, holy S, we're living in a simulation. If this video doesn't convince you to buy Bitcoin, you'll never understand it. Very, very interesting tweet, interesting video. Let's see what else. The state of Florida, the great state of Florida, could launch a strategic Bitcoin reserve by Q1 of 2025. It comes as Trump pledged to establish a national Bitcoin reserve. Florida is positioning itself as a leader in Bitcoin adoption with a push to create a strategic Bitcoin reserve. Florida holds $800 million in crypto-related investments, a number that could grow, according to Jimmy Patronis, the state of Florida's chief financial officer. He says crypto is not going anywhere. It's not going to contract. It's going to continue to be expanding. And I think we'd be a fool if we're not prepared to do everything we can to harness the opportunities here. They're talking about, adding these Bitcoin investments to the Florida pension fund. Very interesting. Finally, let's take a look at the price of old friend, trusty Bitcoin. 101,518 US dollars. I think, how much does that equate to? 101 GBP to US dollars. 100. Nope, that's not right. Try that one again. 101. 80,016 pounds. 80,016 pounds. Bitcoin continues to try to get pushed underwater and just keeps on rebounding back up again. As you can see here, it's high, come back down again, 103. So, I mean, pretty incredible price movements on such a young financial instrument. We'll see what happens in the future. I get questions all the time. I had a very good friend of me said, am I too late? Is it too late? Well, who knows? Personally, I don't think so. I don't think it's ever too late if you have convictions for something. Michael Saylor from MicroStrategy thinks his prediction is within 21 years, a price of 16 million US dollars per Bitcoin. So if you're looking at a price of 100K right now, you're looking at some pretty big returns there. Then one could say absolutely not too late. Other people are going to look at the price of this thing and go, well, it came up from 1,000 US dollars. Now it's 100 grand. I'm too late. Depends on your conviction. If you believe in the instrument, it's not too late. If you don't, it is too late. It's up to you. Very interesting stuff that's going on. Anyway, that is all I've got for you today, this evening. I hope that you've enjoyed the stream. Holly is having a good snooze. All being, what is the date next week? We got, I should be back next week on the 19th. That might be the last stream of the year. Who knows? We'll see. Maybe we'll get one more in before 2025. But I hope you enjoyed the stream. Thank you to everybody for joining in. It's been nice standing up and doing this. Feels a little bit looser. I can move around a little bit. So anything? February 27th, 2025. We're going to have Mike Bristow from Crowd Property. He is the first guest that I have scheduled in. Hopefully trying to get one for January too. We'll see if that comes to fruition. If not, February we'll start having guests. That's really it. See if you have any interesting comments, and then we're going to get out of here. Darren Chimbo Naughty thinks crypto alt season is here and likes the house name, the House Martin name. Alan Stratford, is it formed from House Mart, i.e. House Market? Yeah, it might want. That's a good thought. Anything is better than assets and its associated previous connection. I like the new brand. I do too. Invest Engine, 0% platform fees for DIY portfolios. Cheapest platform for ETFs. Could well be. They got to make money somehow, though. How do they make money? Vanguard's USP, unique sales proposition, was low cost for small investments. I was building it up, £100 a month. But as of that, email, I'm out of here. Okay, I get it. Good evening, Stevie. Hi, Paul Bagworth. Nice to see you. On Trading 212, is it a good idea to elect to receive interest on shares? No, I don't think so, because you're lending shares out to people. I think there is some risk involved. I personally don't do it. I know people who do and who haven't had an issue, but that's one of those things that it's all good until it's not. So be wary. I think it's better just to not lend out your shares because that's how you do get interest. Basically, they're lending it out, I believe, on margin to other investors. So I would not do that personally. Hope that answers your question. Anyway, I'm going to get out of here. Thank you again to everybody. It's been a wonderful year. We've had a good year of peer-to-peer lending for the most part. And I think 2025 is going to be a good year. And the industry will continue to grow from strength to strength. But I will see you next Thursday. And you guys have a nice weekend. That is all I've got for you this week. Take care of yourselves. Bye.